Welcome to another episode of Invigorate Your Business with George Stroumboulis. Today, I sit down with Jim Sogotis. Jim is an expert in the financial investment arena. Jim's going to break down how we should better invest our money, what the new presidency means for the economy here in the United States, tips on how to better approach your investments and get the best returns, and just general advice that we're going to talk about. So enjoy this episode starting now. My name is George Stroumboulis, and I'm extremely passionate about traveling the world, meeting new people, and learning about new businesses. Join me as I sit down with other entrepreneurs to learn about their journeys. This episode of Invigorate Your Business starts now. So we're going to roll into this. I have a guest today from Northern California, San Francisco, Jim Sogotis. Thank you for coming down and joining me.
Thank you for having me.
Appreciate it. We're going to share with everyone listening today just your background, but you are a financial expert. You are in the space of investments, trades, stocks, funds, all that stuff. You have been on the buy side, the sell side, everything in between, the large agencies, banks, everything. You recently launched your own fund called Ploutos, which we're going to talk about. But I think for the listeners today, we're going to learn a lot just about investment here in the United States, how to maximize your returns, how to deal with volatility in the markets, how to deal with new presidents and leaving presidents and how that affects the market. So thank you for sitting down with me today.
My pleasure. I really appreciate you having me.
Absolutely. So talk to me in the audience. How would you describe who is Jim Sogotis?
Well, Jim Sogotis has been in the financial industry for 25 plus years on what we call the sell side. I started on the sell side where I worked for a brokerage firm. Started out actually in the municipal bond area. And from there, I moved over to the equity department, and I was a trader. I was what's called a sales trader. I was the liaison between the floor traders in New York and the clients.
Oh, here in California?
Yeah, mostly in California. So when a client wanted to buy stock from Merrill Lynch, they would call me, and then I would call the floor trader and the trader or position trader. And then that's how the transaction would happen. I would call up, you would call me and say, I want to buy 50,000 IBM at the market. Fine. I would be on the phone with the position trader in New York and said, George wants to buy 50,000 IBM at the market. Tell George he just bought 50,000 shares at X dollar price, and we're done. You'd be on the other line. I'd have two phones to my ears. You'd be on the other line. I said, George, you just bought 50,000 at this price.
Just like that.
Just like that.
Versus today where it's just electronic instant, right?
So that's what it used to be like. And the nice thing about that is you get instantaneous. You're not going through a system. Right. You're talking to someone that has the ability to do that trade. So that's how it gets done on that level. Today, you get a lot of people that are using, the electronic thing, and you hear about what they do. They want to be close to the trunk line so that their trades go through faster. Well, that's yes or no. But what happens is you still get fast transactions, given that you're in the wholesale equity business versus the retail business.
Right. And when you started, were you born and raised in San Francisco?
Born and raised in San Francisco. Worked for my father for many, many years, and ended up going back to college and seeing that there's, I always had that thing, that rush of being in the stock market.
Right.
And that's how I got into it. And it just walked in, got a job, and started doing what they told me to do.
In the Bay Area, this is where you stayed most of your career?
Most of my career. I did spend 3 years in Arizona where I was in the municipal bond business.
Okay.
And I helped a lot of people in that area buying bonds, because bonds are the municipal bonds are the safest investment you can go into because they're backed by something.
Right.
And so you get a return, your money's safe. They're very vanilla, and they're good. They're near and dear to my heart. But when I was a young guy, I wanted the action.
Yeah, absolutely.
So that's why I got into the equity side.
So I think a lot of our listeners are in finance, so they'll understand everything you're saying. A lot of them are not. So I do want to kind of break it down. When you're looking at just different investments, right? Different makeups of places to put your money in as an individual type investor. What are the options? So you just listed vanilla bonds, right? What options do people have?
Well, I mean, there's a whole gamut the way that it is today. Mutual funds, which include index funds, are always good investments. You can go into the equity markets and buy, stocks of companies you may want to buy and own, but you have to do your research. I was taught that there is a pyramid. To buying stocks, there's a pyramid. At the base of the pyramid, you buy the stocks that are stable, that have decent returns, and you want to own those popular names. Mm-hmm. As you go up the pyramid, you slice that up, and then you start getting a little more risk, you add the risk into your portfolio. And those names, again, your second tier could be technology today. Your third tier could be some of the stuff that's out there now, like AI, enterprise software, iCloud type stuff. And then at the top, is your gamble, your throwaway money, if you will.
So what would you say is like a throwaway money type of industry, or is it like crypto or?
To be honest with you, I'm not a crypto fan.
Okay.
And the reason I'm not a crypto fan is because there's no backstop to crypto.
Yeah.
It's me telling you, I'm going to pay you. If I have it, if I don't have it, and I'm giving you crypto, which is a made up value.
I'm with you. And I've done something in the past in the crypto arena and I've lost money. And I'm like, okay, I just got in there, put enough in there that if I lost it, I wouldn't see. On my flight, I just got back this morning from Greece. On my flight back, I watched a documentary it was called The Crypto Queen. And all had to do with the OneCoin. And it was basically a Ponzi scheme and everyone. But yeah, so you see all that, you see that it's backed with the blockchain and they explain the logic. But even then for myself, it doesn't feel tangible for me.
Well, again, it's a third market type currency where it's backed by what people say they will do. It's not backed like when you say you're buying something that's backed by the U.S. government, you're buying the best credit in the world. So there's a backstop there. If anything happens, that you're going to get your money back.
Right.
Whereas in crypto, I mean, they come up, the numbers on that have gone up dramatically, the value of it. And again, it's me telling you that I'll give you, instead of someone saying I'll give you 20,000, I'll say, well, I'll give you 40,000. But okay.
Right.
There's nothing there. There's no real basis for that, for you to say it. It's not like real dollars coming out of your pocket.
Right. So when you're looking at like your pyramid and the way you approach financing and investments, is most of your makeup from the steady? I
like, in our funds, what we like to do is we like to have good, solid names that have growth opportunities. The technology things that we do, we like to buy names that are recognizable, but also have some oomph behind them. As you move up the ladder, up the pyramid, we get out a little more with names that maybe have had a lot of volatility, that have gone back and forth, and again, through our research, we determine whether they're worth putting money back into or not. And then again, for us, there is no throwaway money. The pyramid that I was talking about is more of a retail investor's concept. We don't invoke those kinds of things. We try to stay in what we believe will be names that are doing good things, names that will grow, medical stocks that are coming out with some amazing new technologies. The medical industry will change in the next 5 years. The medical industry will be completely different than it is today.
How so? Based on AI or?
Based on a lot of the AI, I think a lot of what they're going to be doing is they're going to be a new way of being able to look at you and determine what's wrong with you. They're going to map your DNA, and you're going to go into your doctor, and your doctor's going to say, well, what's wrong with you today? You could walk in with pneumonia. Mm-hmm. And they'll feed your DNA into a computer model. In that model, they can add and subtract different medicines, and to see how your DNA reacts to that. And then from there, they can determine what you actually need.
From that virtual model,
yeah.
They'll basically model. And a lot of this exists today, but it's so price prohibitive for the masses, right? So you know, government officials, diplomats, C-level executives, they're spending 50, 60 grand for these body scans where your average person can't afford that.
Right.
So is it going to shift more towards that based on your research?
I do believe that's, insurance companies are going to, start looking at these things and start realizing that, this is cost effective. And it actually helps the patient.
Right.
Because what you'll end up getting is medicine in a patch. You put the patch on, you don't have to take pills. You won't have to remember every 4 hours. You won't have bottles of pills to take. It'll be fed to you through the patch, and you should get better.
That's incredible. So you're when you're looking at this, for the viewers, you didn't just enter the space. You have decades behind you of experience and market ups and downs and just this experience on where to properly invest money and get the right returns, right? Talk to me just about that progression. And then I also want to talk about typical returns.
So that progression happened because, you learn when you're at a company like Merrill Lynch, you learn to know the names that you're talking about. Because you're going to have clients that are going to call and ask, and you have to be able to direct them to the right people that have the real knowledge, but you have to have a basic knowledge of what you're talking about.
Right.
And so from there, you start to find your niche, and you start to find things that, that are exciting to you. And you do the research. You spend your time doing the research, understanding what you're trying to convey to someone else. And you find that the information that you're giving is good information.
Right.
And then from there, as the progression goes, I went from the sell side to the buy side, where we were doing more in-depth research. And it's really fascinating stuff when you start looking. It's boring. It can be boring, right, reading and understanding that. But when you start reading and really understanding that, it's fascinating stuff.
So that transition from the sell side to the buy side, just define, what does that exactly mean?
So when you're on the sell side, you work for a financial institution, a bank, a brokerage firm, a trading company. When you move to the sell side, to the buy side, you become a client.
Okay.
You're a client of all of these firms, and because you're representing your clients.
Right.
People who have given you money to make them money, to build their portfolio.
So you have your own private fund on this side. You're the one going out now to the banks to buy the stocks, to buy the different mutual funds.
Right. We go out and again, through our analysis, we determine what is worthy to buy and put in the portfolio, and we buy them from brokerage firms.
Right. So talk to me about Ploutos Capital, right? This is your fund.
It's a new fund. I've always been in the background. I've always tried to maintain my presence as someone that people could call and talk to. Now we've come out and realized that there are a lot of people that just don't know. And if I can say this, a lot of Greek people that are not aware of what exactly happens in the markets, or how they can be treated properly.
Right.
And that's why we're out now doing this new fund. We're actually doing two funds. One is the actual long-short hedge fund, if you will, which will have a greater return because of the ability to short. The other is just an investment fund that has a long bias. We want the market to go up. There are a couple of things that we can do in that fund to help enhance the returns on that. But those are we want to have two funds that will mirror each other, but will also have good returns.
Okay, so a lot of us, when you hear like the different funds and the different strategies, so two funds, one of them is a hedge fund that's essentially a long short or a short long, right? Okay, define that for us.
Well, so a long short fund is a fund that you can go, again, either way. You could buy long, you can sell against the market if you so choose. That fund, you have to qualify to be in a fund like that.
Okay.
And to qualify, you have to have a net worth of over $1 million, excluding your home.
Excluding your home. So to get in there, it's better returns.
Better returns. You have, sometimes hedge funds get a bad name because they're fast money, so to speak.
Right.
But when you employ a strategy that, like we do, where we're long bias, but we use the short to enhance our portfolio returns, then you can get a good solid return on a consistent basis from that.
Yeah. I used to live in Connecticut when I first moved to the States, in Stamford, and our office was in Greenwich.
Wow.
And my old business partner / boss at the time with the startup, he studied finance. All his buddies were hedge fund managers in the area. Like it's very concentrated in that area. And at the time, it was like that. It's fast money, big money. It's just another world. Okay, so you have this fund, and then you have the other private individual type investment fund.
Right.
What does that look like?
So that will mirror the hedge fund in the long category. That's a fund that we're only buying for it to go up.
Okay.
But there are, with some of the products that are now out there, we can hedge the fund within the legal parameters of the investment fund itself.
Gotcha. So what are typical returns like over the 30 years you've been in this, right? Like, I know it's hard, right? And we're not pegging, but I've always heard, you put it in just the bank, you get a few points. You put it in some stock that's very stable, these blue chip type stocks, and you can make 6-7% a year. And then you start hearing into the other ones where it's double digits and all this. Like what's a good strategy for someone to go in at this, and what should they expect from rates?
Depending on who you're talking to, what they do, how they invest their money, what their philosophy is, there's no reason you can't make 20% on
like a year return
on a yearly return.
Really?
And better.
Yeah, but that's even, obviously some years will be better, some years will be worse, but you're saying on average, if you're doing that, you should see at least 20%.
Well, again, having the hedge, the opportunity to hedge, where you have the long bias, where you have stocks that are going up, and you're going to have a lot of those. You see that in the market today, but you're also going to have stocks that go down. Mm-hmm. And in a hedge fund or a long short fund, you have the ability to take advantage of that short side, where on the other fund, you don't have the short capability. You only have the long fund that's going higher. So we try to offer our clients all the opportunities. If you're not really open to some of the volatility that's in the hedge fund, that's fine. You can go into the other fund, and you can sleep at night.
You can sleep at night. And again, are there any minimums to try to get into a fund like that where it's worthy of the returns?
Well, again, it depends on the manager. A lot of the way they do things today, they're asking for on a regular investment fund, $100,000 to go in. On a hedge fund, they ask for significantly more, only because the returns are higher. I mean, you're asking for 200 to 250,000 for those funds.
For those funds. Over the years, we've had, crashes in the market, right? You've seen a few big gains and big crashes in your time. During those crashes, how do you manage to survive that? Because there's firms that have gone out of business during this. Like, how have you survived with your strategies?
So, again, we do a lot of research. We look out 6 to 9 months. What's going to happen in 6 to 9 months? Not what's happening today. And we're also contrarians. So when the market is doing one thing, we're looking for it to do something else. So if the forecast for us is, hey, the market is overbought, something's going to happen, God forbid a war, those types of things make the market take a hit. Well, we're out there. We see that. We have the information that comes back that tells us this could be happening. So on the long short fund, we start going short. Our portfolio mix starts to change, and we start going more short than we are long, and you end up actually doing well.
So can you explain, if the listeners haven't seen the movie The Big Short, it's worth seeing, right? Just to get an idea.
Yeah.
But can you define what it means to go short on a stock?
So when you go short on a stock, you're selling the stock in anticipation of it going down.
So it's tanking, business is doing poorly, you're betting on that.
Yeah.
Okay.
And it's just the flip side of a stock going up. But you have the law requires that you have more protection if you're going short.
Okay.
So and you can't just be an individual and try to say, well, I want to short this or I want to short that, because there are significant financial requirements to do that.
Can you share any examples of stocks that you've shorted over the years that have done extremely well for you and your firm?
Well, one of the ones that two names that we did very well on. One of them was Circuit City.
Big brand.
Yeah, I mean, it was a big box store, and the management was not doing the things that they were supposed to do to stay competitive. And they just started losing business. And we rode that stock all the way down to zero.
Jeez.
And so that was, we owned a significant amount of shares there, and it went to zero. And it was just, it was sad in that a good name ended up going bad, and it went down to zero.
Right.
But, that's the way it goes. The other one that we did very well on was Lehman Brothers.
Oh, wow. Okay.
Because, again, being in the business, we were seeing what Lehman was doing and what their exposure was in the marketplace. And there was just no way they could come back.
And was that tied to the housing market, Lehman Brothers? That's where.
Yeah.
Okay.
And all of those things that happened back then, there was just, it was financially impossible for them to make a comeback. And so they went, and just like Drexel Burnham did the same thing, we didn't own as much Drexel Burnham, or didn't short as much Drexel Burnham, but we did a significant amount of Lehman Brothers.
Of Lehman. And Lehman, remind me, so the housing crash was 2010, right, essentially. So what did it mean to short stocks then towards the housing market? Because
well, you were shorting a lot of stocks that were we shorted banks. We shorted a number of mid-level banks that were in the $25 to $30 range that went down to $4.
Right.
And then the Fed came out and said, well, in order to support those banks, they opened up what they call the Fed window, and the banks basically were borrowing directly from the government.
Right.
Now, the whole housing thing was, for example, you walked into a bank and you said, I want a home loan. And they said, okay, well, what are you buying? I'm buying a $500,000 home. and you had excellent credit, you had the money to put down on the bank, on the loan and everything, but they wouldn't give you the loan. The reason they wouldn't give you the loan is, and my analogy is, when you buy a car and you take it off, a new car, and you take it off the lot, it's worth 20% less.
Mm-hmm.
Well, it was the same thing in the home industry. You bought a home, and because of the way the government said companies had to mark to the market, that home was now worth $300,000.
Right.
So if they gave you a loan for $500,000, you were, 2 days later, the property was only worth $300,000. So now they had to carry that all those losses had to be carried on the books, and the losses were just astronomical.
Across millions of homes, millions of mortgages. Yeah, it added up.
Very fast.
Right. The biggest scene that just sticks out with me in The Big Short was they're at a strip club, and the stripper's explaining to the one guy that she's on her fourth home, right? And she only made this much, and how she was able to just get mortgage after mortgage, and it collapsed. So that was 2010. Now we're entering 2025. A new president, President Trump, was elected. He's going to be the president by the time this airs, right? So not trying to get into politics, but just someone like a Donald Trump coming into office already. We've seen the market gain over $1 trillion, right, in activity. What does this mean for investors? What, from your outlook and what you've seen over presidents in the past, like, is this a good thing? Is that going to help the economy?
Well, I believe no matter what they tell you, Wall Street likes Donald Trump. Okay? Wall Street has always made money when Trump was involved. I do believe the markets will go up. I do believe that you're going to have a lot more real growth versus hyped up growth. And I do think that there's going to be a significant opportunity coming for people to say, okay, you know what? It makes sense now. I can get in, and my money will grow.
Right. Here in the States. Internationally, you're seeing a lot of countries just freaked out with like trade coming with the European Union. I'm seeing a lot of the leaders there are scared because now there's going to be tariffs imposed.
I don't know if he's going to impose tariffs. I think that was just something he wanted to use I think that was more of a political thing than anything else. Tariffs are not good. Richard Nixon put tariffs on the Japanese cars that came into the country, and all of a sudden the prices just went up to what the tariffs were, and they never really work.
Right. And there's even on the stuff we make, my lighting company, we import a lot of our stuff from Asia. Right. And we're still paying well over 30% tariffs that were imposed from Trump, didn't get removed in the following administration. And, we just absorb it. We pass it along. Like it's just this chain reaction. And you're like, we're not really solving anything. I understand the intent on wanting to bring manufacturing back home. And that's not a bad thing. Right. But I think the economy already, you're just seeing where it's going. And if people feel good, hopefully we can kind of get out of this mess.
Well, I do believe that you'll see a lot of companies come back to America. Again, before Trump, there were American companies had a tremendous amount, and I read somewhere in excess of $500 billion in foreign banks.
Right.
And they never wanted to bring it back because the taxes on that money was 50%.
Yeah. So
Trump came in and he lowered that. And that was one good thing that the guy did. He lowered that number. And so people started, all these American corporations started bringing all their foreign cash back into the United States. And that did help the economy, because then they could subsidize their manufacturing and growth here in this country.
Yeah, absolutely.
And that makes sense.
Yeah, I would love to see the next 4 years without any, global pandemics, COVIDs, right? And just see, what we can do as a country here.
Right.
The States is resilient. And I guess the key takeaway for me is, I don't care what side of the aisle you're on. It's one country, it's America. Can we just get behind and realize that we need to do better than what we've done?
Well, I agree with that. And as an asset manager, we don't look at, political stuff. I mean, we have to take what's in front of us and work with that. So
Absolutely.
whichever party is in, we try to take the guesswork out of what they're going to do so that we can make our decisions that will eventually help our clients.
Totally. So the summer, we were on our way to Europe with my family, got diverted into San Francisco, plane issues, and we ended up staying a few days. And going to San Francisco over the years in the past, I used to love it. Like, such a beautiful, should be top 5 cities in the world, right? With its beauty and its culture, and it has everything. What's happened with San Francisco?
Tough. It's been a long haul. San Francisco was always a fun place to come. It was always clean. It was, people are friendly, and you just enjoyed being there. With everything that's happened in the last 3 to 4 years, it's just been hard as a native San Franciscan to see what has come. And again, I think it's a lot of it's political. And San Francisco is known as being a liberal city. That goes without question.
Sure.
But even the liberal population in San Francisco is frustrated with what's happening because the drug use. I mean, our Greek church is located in an area that's teetering.
In San Fran proper?
Yeah.
Okay.
And it's in the mission area.
Yep.
And I mean, you see people walking down the street, and they just, if they need to relieve themselves, they just go up to a wall.
Oh yeah.
And our church has had its spray painted, because it has nice outside. The outside has nice marble.
Yep.
So they look at that, and they'll spray paint obscene things.
What's the church name?
Annunciation Cathedral.
Cathedral. Okay. We Googled, because when we were leaving, our engines blew on the airplane.
Oof.
And we had to do an emergency landing Sacramento, then go back to San Fran. And when we went back, we were just trying to Google a Greek church to go and light a candle, and just thank God we didn't die. And I remember it wasn't open at the time there. San Francisco, it's walking zombies. I don't, again, politically, remove that aside. This is just not okay for any city in the world. We're in America. Right? And San Francisco is like such a nice, beautiful city.
It's a beautiful city.
And it's just, you go down to the Tenderloins, and literally at nighttime, there's hundreds of people just shooting up in the streets. You see it. And I think out of all this, the most frustrating thing is, Chinese president visits Xi Jinping earlier this year. It was late last year.
Right.
And for his visit, the city was spotless for that area for that weekend.
They came in and they washed down all the streets. They moved all the homeless, all the drug addicts to different parts of the city.
Caged it up, made it perfect.
And I mean, it was, again, seeing that was like, wow, this is what I grew up with.
Yes.
And it was nice to see, but it was short-lived.
Right. But I guess that's what's frustrating. Are they going to do that with LA now with the Olympics coming? Right.
So they're going to have to.
Yeah. And they're able to clean it up. Obviously there's programs, and there's clearly a problem with drug use and homeless, right? Like, there's clearly a problem, and that's a big issue. I don't know the solution. We got to figure that out. But when you just kind of let it happen and let it run over the city, it's a shame. And most of it is politically driven. It's like, come on, let's clean this up.
Well, and that's the sad thing about it, because in the end, the people of San Francisco are the ones that are paying the tab.
Yes.
And I mean, and we get a bad connotation now. Our city is getting, and it isn't a bad place.
Right.
It really isn't. I mean, there are sights, and there are sounds, and there are restaurants, and you can just go up and enjoy yourself. And people are shifting where they're going to some of the older areas in the city that are a lot safer to walk at night.
Absolutely.
And it's, and because in the Tenderloin, you can't, I won't even drive in the Tenderloin at night. I mean, and I'm from San Francisco.
Yeah, and you're from there.
I've seen people with guns, just walking down the street casually. And the police, just they can't do anything about it.
Well, especially when you're chanting defund them too, when these poor people are trying to do their job. That's a whole other political.
Yeah, right.
So talk to me part of that, right? Like all this COVID, inflation, where we're at with inflation. You're a financial expert. Like, how do we manage this? How do we bring the inflation number down and get back to normalcy?
So the things that you have to do, really, if you cut spending, if you allocate your resources to areas of need instead of just funding everything, because all they're doing is printing money.
Right.
The government is just printing money to keep funding everything, and that creates inflation. And because of that, it just keeps going up. It'll just keep going up. Now, hopefully, that's going to change. And we have the Fed is going to be coming out next week in anticipation of people are saying there's going to be because of the new regime that's coming into Washington, they're estimating that it's going to be rate cut again. Excellent. Which again will be good for the economy.
Absolutely.
And that's what we need to rein in inflation.
Yeah, absolutely. Jim, talk to me on over the years, like how do you find new investors? You've had investors, and we've talked offline, net worth, hundreds of millions of dollars, right? And how do you go and seek the right type of investor to come into your fund? Because you're not opening it up to just anyone. Like you want to be selective, right? You want.
Well, the funny thing about it is there are a lot of people that want to get into hedge funds. If you want to get into a hedge fund, you need to be able to sit down with the manager and ask them important questions about what they do, how they do it, what tools do they utilize, what is your requirement, can you actually afford to, people like saying, well, I'm in a hedge fund, and they do that because they want to say that they're in a hedge fund.
It's got this thing to it, right? Like, yeah.
But the reality is, you want to have people that you can actually trust, because you're giving them your money,
right? And
so you want to be able to trust them. You want to know what kind of investment history they have, their backgrounds, where they've been, who they've worked with, how they do their job. Those are the things that are the most important to learn from from potentially going into a hedge fund.
Right. I'm just curious right now. When did shorting a stock become a thing? Like what year? Because when you look at it, you're like, I understand it's legal, it's the market, you could do, but it's kind of morbid in a way that you're betting on the failure of a company, of an economy.
Right.
Right. Again, I think it was Trump and Clinton in a debate. She was attacking him about, you're not paying your share of taxes. He's like, I'm working within the system that you people created, right? So the same thing with shorting stocks, it's legal, but it's just crazy. Like, how did that even become a thing?
So years ago, I mean, I would say, shorting has been around for a long time, but what it took on a whole new life when you had the 80s, and companies were not doing what they, for example, General Motors built a terrible car, and people were like, well, I don't want to own General Motors. I'm mad at General Motors. So what can I do? And, that's when shorting came out. Okay, you can short the stock and say that the stock is going to go down. Now, you don't really want to do that in an American company. You don't want to see someone fail. But when you have management that is not serving the people or its clients or the market, then they don't deserve to be patted on the back. They deserve what's coming to them. And that's why people start saying, okay, now we'll short. Now I'll short this name because I don't believe, in what they're doing, and their earnings are going to validate what I'm saying, and the stock will go down.
Gotcha.
Now, on some companies, it happens to them because, it's just market problems or stuff like that. For example, the handheld industry when they first came out, all those names,
Palm, BlackBerry,
all those. I mean, they were great things, but they never kept up with the times. And so they ended up losing their market share. Apple came in, took things to, and that's why Apple soared so much. And then companies like Palm and BlackBerry have basically gone by the wayside.
Which is sad. I'm Canadian and I'm Greek. And then you look at Research in Motion, which was BlackBerry, was started by a Greek Canadian, Michael Azadidis out of Waterloo. So we were rooting for him. I was a big supporter of BlackBerry.
It was a great product.
It was a great product at the time, and the keyboard and everything. And then just the keyboard, right? There's a great documentary that came out on the movie, but again, just not keeping up with the times and become obsolete. It's unfortunate.
Yeah, and people now take advantage of that.
Right.
And in some cases, rightfully so. Now, in some cases, it's just, that's what happens.
Yep.
Restaurants, for example, today, there's many restaurant chains that are closing, they're folding. They did too much. They overbought. They overextended who they were, and now they're paying the price. So companies like that, you say, okay, well, not that you want to be greedy, but a guy like me wants my partners or clients to make money. We want them to do well. And so we do take advantage of those situations.
Absolutely. Your strategy, right? You always look for alternate investment strategies. How do you define alternate investment strategies? So is traditional real estate, is that what you mean?
Well, so we stay, we don't go into real estate. We stay in the equity markets. And what we look for are names in the equity markets that have potential. Now, there's all kinds of different equity, scenarios that people come up with, and some of them would be like REITs, real estate investment trusts. Those were set up as an income product within the equity market, and some do very well. Some of them, because of what's happened, have done poorly.
Right.
So those are things that alternatives. You have all these option markets and all the index markets that have come around. Those are you really have to be careful when you go into those, because the financial requirements, number one, are significant if you want to be a player in that market space. But those things can turn on you on a dime. Those are things that you have to watch consistently, and it's sometimes it's not worth the time and effort for the return that you're going to get. Gotcha. So we go into stuff like that very with our eyes wide open, knowing that we have a strategy that we're going to do this for this period of time, and after that we're going to move on.
Gotcha. Give advice, right? You started your career. By the way, what industry was your father in when you were helping him?
My father was in the ship supply business.
Okay.
We're Greek, so we had to be, something tied to ships.
Yeah. Restaurants or ships? You guys chose a good one. Okay. So he was supplying ships that would come into port, and then you would...
Right.
Okay.
So we supplied, in San Francisco, we supplied a lot of the Greek companies that had ship. It was called tramp shipping, where they just get cargo to cargo going wherever they went. So a lot of the Greek companies did that. A lot of Greek companies, like the Onassis companies, they had oil tankers. So we have large refineries on the West Coast, so they would have those contracts as well. So we supplied ships, and I did that from the time I was the great thing about it, the great learning experience that I had, was as a young 10-year-old kid, spending summers driving around in the trucks delivering to ships. I spoke Greek.
Okay. So
the truck drivers that my dad had were Americans. So they would go to Greek ships with Greek spoke Greek and Americans spoke English, and it was just nobody, they couldn't communicate.
Right.
So here I am, this 10-year-old punk, and I'm trying to tell them, I was going back and forth between them. And so I learned I got my lessons from working for my father in the summer growing up, and then going into working for him, as my first career opportunity.
That's incredible. And you're talking about 10-year-old boy dealing with ship workers. Like that's, were you smoking with them by 10 years old or what? A pack of smokes?
Well, what was really nice was I'd go on to the ships and, and they would ask, because being Greek, the first thing they'd ask you after the food was delivered, they'd say, "Are you hungry?" So I'd look at the driver and I'd say to him in English, "Are you hungry?" And you think he's going to say no?
Yeah, no, never.
So I said, "Yeah, we are hungry." So we'd go up and sit down with the crew and
cool.
and have food together. So it was just a great learning experience about people and what makes people happy, and how you pull from people to really build yourself. And I think it's helped me in my career, because I've dealt with people from all over any seafaring country in the world I've dealt with.
That's incredible.
And so I know the trades, the customs of all these different countries, and I look at everybody as just another human being.
See, I have 3 young daughters, and number one thing I want them to be is just good people, be able to communicate. And I'll tell them sometimes, let's talk to me like we're presenting, like it's all about communication, understanding
right.
people, which at Ploutos Capital, your company, Ploutos means wealth in Greek, right?
Right.
So it's just a great name. And one of the principles, your philosophy foundation is a word that is thrown around a lot in Greece, but your average person here in the States doesn't know, is philotimo.
Right.
Talk to me about that philosophy and what it means for you.
Well, for me, it means everything. I mean, again, having the Greek heritage and being brought up that way, my father never looked at any man, and he would always say, "You find the good in people." And, and we were raised with philotimo. And so I learned that from a young age. I learned that there's good and there's bad people. And so I take that with today, to put it in my context of today. I look at people and I try to help them, and I explain to them, and I show them what we're trying to do, so that we separate ourselves from other companies, in that we live by the word, the actual word philotimo. And, if I may, part of our proceeds, we are going to turn around and donate back into the Greek community wherever it's needed for whatever purpose. And I have a special affinity for children.
Yep.
So if we can help, there is a organization in New York that right now they're helping graduate women with their expenses, school expenses and whatnot. So that's something that we want to get to, so that we can be a part of that, so that we can actually live the term philotimo and hold our heads up for it.
It's magical. Doesn't get better than that, right?
And the people that you meet and the people that you talk to, I mean, in our culture, it just comes out in us.
Yes.
And when it just comes out, I mean, you just look at, you just say, well, I'm really proud to be who I am and the heritage that I have, because it just says so much about what we can do as a people.
Absolutely. That's really good. And I hope you guys could generate a lot, to give a lot and make changes. How can people reach out, get in contact with you specifically? And we'll put all the links up. So
we have the website. We have, my phone number's there, and I,
what's the domain so everybody can hear it?
It's Ploutos, Ploutos cap.com.
So PloutosCap.com. Okay. That's great. And then we'll put your LinkedIn on there as well.
Right. And then my phone number is there, that on there. And again, my email is jim@PloutosCap.com.
Okay.
And so I'm I answer everything within 24 hours.
That's it. That's old school, which we don't have anymore, right?
It's the way I was raised.
Yeah, that's great. That's absolutely great. So one thing I wanted to understand more of is the role of the banks here in the United States, right? And I mean, it's globally, central banks, every country has it, but let's talk about the US. Are they controlling and owning more of the process? Like just talk to me on the role of what a bank was versus today.
Years ago, banks were places that you went and put your money because you could trust them. I mean, they were brick and mortar buildings and you knew that they were going to be there. And that was great. As time went on, brokerage firms came along and they took money from banks. That's how they built the brokerage industry, which again was something that was okay because they were providing investors with a better return. Well, after the 2010 fiasco, the government went back to the banks and they said, please bail us out. So banks bought all the brokerage firms and they ended up owning them. And over time, what they now do is they want to own your assets. They want to control you. And by control, they're not letting you go out. If you buy something from Merrill Lynch today, you can't go out and buy something from JP Morgan and expect it to be in your Merrill Lynch account. They tell you, no, we don't support that. So you're going to have to do that on your own. They want you to be strictly B of A, Merrill Lynch, and they want your mortgages, they want your auto loans, they want your investment dollars, and they want your checking account. So they want to control your life. And this is one of the things that I don't feel good about, because not only do they want to control your life, the fees that they're charging you amount to a lot of money. They just keep raising their fees, and their returns to you, they're going back to the old bank model where they're saying, if you get 6 to 8%, you're doing well. Well, we've done significantly better over the years, and that goes directly to the client. There is no middle person that's going to take their cut. And
that adds up, right?
It's significant.
So why do you think the banks, because again, is it easier to say, you know what, I have, like for me personally, I have my bank, I have my checking, then I have a mortgage here, and then I have another mortgage for something else there, then I have, and I'm like, my gosh, it's just all over. Is it easier? Like what's their end goal, do you think, on wanting to have everything centralized and control?
Well, number one, they want to control you. And sometimes it does make sense, because if you have things all over the place, unless you're good at doing that, it can be time consuming.
Right.
But to control you is, to control your whatever you do it just doesn't sit well with me.
No, and seeing just all the other controls that we're at, and people being silenced or censored and all this stuff.
And on top of that, there are fees. There's a fee for everything you do. And while they tell you, you're not paying a commission, you're paying a fee.
Absolutely.
And then if you have a broker, you're paying him a fee. So the fees start to really mount up, and they cut into your returns.
Oh, absolutely.
And we don't do those. We don't do that.
So you're suggesting that people should be diversified. Don't go all in with a bank.
Right.
You should have, I'm making money from this arena where.
Well, you're going to have to buy your mortgages and your loans from them. Okay. Your investments, you don't have to be tied to them, because you can do so much better. Instead of getting a 6% return, you can get significantly better through a manager that is out in the marketplace, that does what they're supposed to do to help their clients grow their wealth.
That's great advice. From a rate, I know you said earlier, we could get up to the 20s. Have you seen anything higher over like really good years? Can you share?
Yeah, I've seen. We had some pretty spectacular years where we were in excess of 40%.
Jeez.
And what was really, again, hard work, and and knowing what was coming, and seeing, being able to look out is why we did that. But it doesn't happen by accident.
Right.
It takes a lot of work. It takes a lot of dedication. You have to know again, the software that we use is very sophisticated, and it can help us make our decisions easier so that we know what we want to buy.
Last question I have for you, and I appreciate you making the time, is so from when you were a young boy and then you decided you want to get into the whole finance investment world, like what's advice for aspiring people that want to get into this space? What do they need to do?
You need to really study finance, because the things that you learn today are a lot more usable. And you need to pay like anything else, you need to pay your dues. You start out someplace and you learn everything you can learn. You learn all the good things. And with that, you can start to market yourself. I believe that there is a tremendous opportunity because, again, the way banks do things today, I think there's going to be a tremendous opportunity for people to really come out and do the right things for clients and help them with their portfolio, help to grow their portfolios and their wealth.
Absolutely. Primarily in the U.S. only, or do you have any footprint outside of the country?
Right now, we don't. And I mean, in the U.S., I think right now is significant.
Absolutely.
Again, in San Francisco, we have Silicon Valley. So we are exposed to a lot of those companies, and there are a lot of them coming to Silicon Valley all the time.
Amazing. Jim, I appreciate you sitting down with me.
Thank you for having me.
This has been amazing, my man. Thanks for listening to this episode of Invigorate Your Business with George Stroumboulis. Please hit the subscribe and like buttons and follow me on all the main podcast streaming channels. Also, please share your comments when you can. I appreciate your help in expanding this network to a worldwide audience. Until next time, stay invigorated.